Good morning, children. Today we are going to start the chapter Cash Flow Statement, a very important chapter in our Part B section of the syllabus, that is Analysis of Financial Statements. Children, I hope you remember last year in class 11 we have prepared what is known as cash book. And in cash book, you have seen that on the debit side of the cash book, we used to record the inflows of cash, and on the credit side of cash book, we used to record the outflows of cash, both cash transactions as well as banking transactions. So that was a ledger format for all trading firms to be prepared whenever there is inflow and outflow of cash. In the same manner, in non-profit organizations, the NPOs prepare what is known as receipts and payments account. Here in company accounts, when the companies have to prepare their financial statements, they have to also prepare this statement called cash flow statement. So as the name says, cash flow means inflows and outflows of cash in a accounting year. So let us see what it says. Cash flow statement is a statement that shows the flows, that is, inflows and outflow of cash and cash equivalents. This is a new word, cash equivalents. As we move ahead, we are going to see it in detail. During the period under report, that means the accounting year for which we are preparing the cash flow statement. Now, transactions that increase cash and cash equivalents are termed as inflows of cash, whereas those transactions that decrease it are termed as outflows of cash and cash equivalents, just like what we did in cash flow. Cash flow statement is prepared according to the accounting standard. Please take care of this word accounting standard. In abbreviation, we call it AS. So, which accounting standard? Accounting standard 3, and that too revised. So, in short, we call it as AS3 revised. AS3 revised means accounting standard 3. Now, the accounting standard prescribes that cash flow statement is prepared by either of the following two methods. There are two methods to prepare cash flow statement. The first method is called direct method and the second one is called indirect method. And we have to study only indirect method because direct method is not in our syllabus. But you should be knowing it by name that there are two methods. I hope this is made clear. Now, according to Accounting Standard 3 revised, the cash flow statement which is prepared, it shows cash flows under the following three major heads. Remember, there are three major heads which are the important element or content of cash flow statement which we are going to prepare under indirect method. So what are those three heads? Number one, cash flow from operating activities. An important word, operating activities. Number two, cash flow from investing activities. Another important word. And third, cash flow from financing activities. So the flows of cash, that is inflows and outflows, are represented in cash flow statement under these three major headings: operating activities, our investing activities, and financing activities. Now, children, this is a very lengthy chapter with a lot of new things coming up which we haven't done in accounting so far. So, we have to take care of this topic and this chapter right from the beginning, especially the terminologies used which is coming up for the first time. So, let us go into those terms and terminologies which is coming up in this chapter and which is of vital use for us before we go into accounting treatment. So this is definition or key terms used in cash flow statement. I have taken this clip exactly from your textbook. This is given as it is in your textbook. I think it's given on page number 5.3 in chapter 5 of your textbook analysis of financial statements. So, in your book also, you should be marking this very important. So, let us go into the terms, and the first term, which is very exhaustively used, is cash. You all know cash, it is a current asset, right? But according to this chapter, there has to be a definition or meaning of cash, which you may be asked in your examination for 1 mark, or your examiner may ask you in your practical viva. So if you are asked what is cash, your answer should goes cash means or it comprises of cash on hand and demand deposits with banks. Not only your cash in the business, which is there for a business enterprise in hand, which can be used very immediately, but any demand deposits with banks, that means whatever amount you have in your bank accounts and different type of accounts which are operated is also a part of your cash. So this is very simple to start with. Now the new word coming up here is cash equivalence. Cash in bank we are all familiar with, that is a part of cash. Now, what is cash equivalents? So, I'll go directly into what is the technical meaning, what is written here. It says cash equivalents are short term, highly liquid investments that are readily convertible into the known amount of cash and which are subject to an insignificant risk of change in value. An investment normally qualifies as cash equivalent only when it has a short maturity of, say, 3 months or less from the date of acquisition. Children, before I go into explanation of this, I hope you remember a chapter called Bills of Exchange in class 11th, which we studied. So you must have seen there that when the bill was prepared, our question used to tell us it is for a month or a 2 month or a 3 months time period or maybe 4 or 5 months. But most of the bills were within 3 months. So that is what is known as something which is easily convertible into cash in a short time period, short maturity period. So bills receivable is one example which had a short time period of maturity. So that is why the word short term is used in the definition or meaning of cash equivalents. Highly liquid investment means which can be very easily converted into cash. That may not take a long time, but the moment you want it, you will have to take a decision and it may be converted into cash. So that is why it's called highly liquid investment. I hope you remember liquidity ratios where we talked about liquid assets, correct? So this is what is the meaning of cash equivalents, and here is one word which is written as current investments. So investments in your company accounts in this chapter can be of two types. Either it is a current investment or it is a non-current investment. So if it is non-current investment, it is not a part of cash equivalent. But if it is a current investment, it becomes a current asset. So it has to be treated under cash equivalent, and especially because it is marketable securities, and that is why it is a part of cash and cash equivalents. So here it's written examples of cash equivalents are current investments, treasury bills. Remember, I talked about bills of exchange, commercial papers, preference shares, if these are redeemable within 3 months. Only those preference shares which have a redemption time period of 3 months from the date of its purchase or acquisition, and these have insignificant risk of change in its value. So this has to be taken care of. And all these terms, treasury bills, commercial papers, preference shares, you have studied in business studies last year in class 11, as well as in class 12 when you're going through chapter called business finance and financial market, you have come across these terms. So I need not go into detail of these current investments examples. Now, when we go into the chapter cash flow statement and prepare it for accounting purpose, we have to calculate cash and cash equivalents at a stage which we will be discussing in the format of cash flow statement. So, when you are taking the amount for cash and cash equivalents, it will include all these things from your question. What is cash in hand? It means cash at bank. Any checks and drafts in hand with the business enterprise. Then short-term investment, I just now talked about marketable securities and your short-term deposits in banks. If these are part of your question, remember you have to take it under the heading cash and cash equivalents, and there is a specific area where you have to represent it in your cash flow statement. Uh, just now, I've talked about three activities: operating activities, investing activities, and financing activities. So, you will see that when we go into the accounting part, everything from your balance sheet and other information will be a part of three activities, either operating or investing or financing activities. Every head, whether it is a current asset, a non current asset, it's a current liability, non current liability, shareholder fund, everything from balance sheet will come under these three categories, except what? Except cash and cash equivalents. These heads will never be a part of these three activities. They are represented separately in your format of cash flow statement. And when we discuss the format of cash flow statement next class, we will see that it is represented at a fixed place. I hope these new terms, although new for us, but once we read it and we understand and we start doing questions, this will become very familiar to us. So, this is about cash flow statement to start with. And then this word or term cash flows, which is not a very new term for us. I already talked about in the beginning that cash flow means inflows and outflows of cash and cash equivalents. We just now went through, we just now saw what is cash and cash equivalent. So whenever there is a movement of cash, according to those lists which you have talked about, it has to be either inflows of cash and it has to be, or it has to be outflows of cash. So that is must to be recorded in cash flow statement. Now let us see those new terms which we have seen under the three headings called operating activities, investing activities, and financing activities. Children, this we are going to talk about with questions which we are going into. This is a area which should be understood when we do questions. So here is operating activities. Now, according to the technical meaning of operating activity in this chapter, cash flow statement, the sentence says operating activities are the principal revenue producing activities of the business enterprise and other activities that are not investing or financing activities. So this is the technical language they have used. They are saying which are not investing or financing activities. This is one important thing. And these are principal revenue producing activities. So principal revenue producing activities means anything which is related to trading and profit and loss account according to financial statement, and in company account it is according to statement of profit loss, which is your main revenue generating activity. So if you're in trading account business, your trading is the main principal producing activity. If you're manufacturing, it relates to production part. So that is what is main revenue producing activities: the sale of goods, the purchases, the salaries paid, rent paid, carriage paid, many other areas included in cost of revenue from operation, then related to revenue from operation, which is must and which is compulsory to be operated, so they become a part of operating activities. Now, since this says which are not investing or financing activities is operating activity, so let us first understand what is investing activity saying. Investing activities are the acquisition and disposal of long-term assets and other investments not included in cash equivalents. So this is a technical sentence according to the chapter used in the textbook. Let us make it simple. Acquisition means purchase. Acquisition means purchase. And disposal means sale. This is simple. So you should take it. Investing activities relates to the sale and purchase of long-term assets. Long-term assets means those non-current assets like fixed assets, example building, machine, motor vehicle, etc. And even non-current investment. I just now talked about current investment under the heading cash equivalents. So, what about non current investment? Non current investments are part of investing activity. So, whether there is a purchase or sale of these non current investments or non current asset, it will always be a part of your investing activity. It will not go anywhere else. So, in simple words, any sale or purchase of fixed assets or non-current assets or non-current investment will always relate to investing activities in simple meaning. I hope this is clear. So if this is investing activity, so it should not be a part of operating activity. That is what it means, not investing. Clear? Rent paid will not be your investing activity because it is not non-current in area of your balance sheet. It is related to operating activity. Salary paid will be a part of your operating activity. Now comes financing activities. Financing activities are the activities that result in change in the size and composition of the owner's capital in case of company and borrowings of the enterprise. Chalo, let me make it simple. You remember debt and equity when we did ratios, debt equity ratios? So equity means owner's capital. So whenever there's a change in equity, that means equity share capital or preference share capital, that has to be treated under financing activities. Similarly, any change in the borrowings. Borrowings means long-term borrowings, debentures, long-term loans taken from banks and financial institutions. So whenever it is a part of a question, it has to be treated under financing activity. In simple words, any increase in share capital, debenture, long-term borrowing, reserves, sorry, not reserves, it's debt and equity will be a part of your financing activities. So from the balance sheet, shareholder fund, non-current liability like debentures and long-term loans, it will be a part of financing activities. And non-current assets will be a part of investing activities. So what is left in the balance sheet now? Current assets and current liabilities. So those current assets and current liabilities will be treated under operating activities. So let us keep it simple this way. To start with, we have just seen a bird eye view of what these three activities is all about. Now, when we go into format, it will be made very clear which is the area for which activity. And then once we move into accounting treatment, you will be absolutely settled, comfortable with these three activities. But children, when it is asked in exam about these three activities, either in theory or in your viva for practical exam, you must answer these two lines for these three activities. The best answers for replying back. So today we stick to this much explanation for the beginning of this chapter, cash flow statement. And I hope you must go through the pages which are in the textbook from page where chapter 5 starts. For the first few pages, they have given you all these theoretical terms. It also talks about objective importance and limitations of cash flow statement, which we are going to discuss in our online class tomorrow. And every point there is important. I did not want to write it here because it will make chapter very lengthy theoretically, and the time in hand do not permit us to make all those things come into videos here. So what is of use, what is of prime importance for us to go into accounting treatment, we have seen as the theoretical aspect of cash flow statement. Next class we are going into the format, and then we will go into directly accounting treatment for cash flow statement. Once again, I'm reminding this chapter has minimum 12 marks in your board examination out of 100. 6 marks, as I've told you, in your written test for practical exam, there will be a 6 marks question for cash flow statement, and there has to be one 6 marks question also in your board examination AISSCE question paper, and it is always the last question of part B for 6 marks. So 6 plus 6, 12 is the minimum weightage out of 100. You may get even one marker questions, maybe one question or a two questions, so that makes it to 14. So minimum 12 to 14 is your weightage of this chapter. So take care, revise it, study, make notes in your copy, and take care of doing it very nicely right from the beginning, because this is one of the very important chapter. Thank you. We'll meet next class with the specimen format of cash flow statement. God bless you all. Take care and keep studying. Thank you.